Bitcoin climbs above 60K after report SEC won't block futures ETF. Bitcoin touched as high as $61,500 on Friday, October 15. For the first time in almost 6 months, Bitcoin has eclipsed the $60,000 mark and is now trending higher. But is this rally short-lived? What does Congress have to say about this? What about the Fed and Treasury Secretary or Sleepy Joe's working group on financial markets? But before we get into the video, please remember that this video is for educational purposes only and it is not investment or financial advice. Please do your own research before making any investment decisions. Now, let's get right into the video. Treasury Secretary Janet Yellen just warned that the government must move quickly to establish a regulatory framework for stablecoins. Is the report that the SEC is not blocking the Bitcoin futures ETF a sign that the government is finally going to get off our backs about Bitcoin? Not so fast. What's in it for the government? Just like CEO of JP Morgan Chase, Jamie Dimon said, the government will claim it's in the nation's best interest to stop money laundering, for Bank Secrecy Act purposes, and most of all, tax. That's right. Why would the government want a competing digital currency, some of which with the actual name, US dollar Tether, without taxing it? Keep that in mind. Breaking today, Bitcoin jumped above $61,500 for the first time in almost 6 months, quickly approaching its all-time high of $64,863 on April 14, 2021, following a report that a Bitcoin futures exchange-traded fund, ETF, will clear the U.S. Securities and Exchange Commission. At one point on Friday, October 15, the cryptocurrency jumped as high as $61,500. According to CoinDesk, the SEC is reviewing around 40 Bitcoin ETF filings with multiple decision deadlines on futures-linked products hitting next week. According to Bloomberg, the regulator is expected to approve at least some of them, clearing the way for trading to begin. The SEC does not need to take any formal action to approve the filings. Under federal law, applications can become effective if the SEC allows a mandated deadline to pass by not requesting changes or directing the aspiring issuer to pull the filing. Bloomberg named applications by ProShares and Invesco as 2 proposals that may be allowed to launch under this law next week. In other news, North America is now the second largest crypto market amid the crypto ban in China. According to the most recent chain analysis report, monthly crypto transaction volume in North America grew by over 1,000% between July 2020 and May 2021 from $14.4 billion to $164 billion. Chain analysis attributed the growth to DeFi, which represented 37% of total transactions in North America between July 2020 and this past June. The region's top exchange during that time period was decentralized trading platform Uniswap, followed by centralized exchange, Coinbase, and decentralized DYDX. The US, the region's largest market, topped the Chainalysis DeFi Adoption Index, which measures grassroots adoption of DeFi. Both North America and East Asia saw a slight dip in total transaction volume in May. The decline in activity in East Asia is likely explained by Beijing's crackdown on crypto, which started with a state council proclamation in May. China has historically been the world's biggest Bitcoin mining country and a major hub for crypto trading. The stock market seemed to react well to the news as well. The Dow Jones Industrial Average rallied 300 points Friday, as Bitcoin topped $61,500. Tesla stock looked to make 5 straight days in the green, while tech giants Advanced Micro Devices, Alphabet, Microsoft, and Nvidia are stocks to buy and watch. Among the Dow Jones leaders, Apple rallied 0.6% Friday, while Microsoft moved down 0.3%. Tesla gained 1.1% Friday, set to extend a win streak to 5 sessions. Among companies reporting earnings, Goldman Sachs reported strong earnings results ahead of the market open. Among the top stocks to buy and watch, Advanced Micro Devices, Alphabet, and Nvidia are in or near new buy zones. Further today, here's how the other cryptos reacted to the news. Ethereum is up 1.5% to $3,862, Binance fell 0.25% to 470, with Cardano up 1.25%, Solana up a whopping 6.5%, Litecoin up 4.5%, Polkadot up 3.25%, representing a near 25% increase in past 7 days, Polygon up a staggering 19% to $1.51, and Shiba Inu coin is down 10.5% with a market cap of just under $10 billion. Now more about the Bitcoin ETF news. Sure, Bitcoin ETFs are looking like they will get a green light, but what would government regulation and tax of cryptocurrency do to the crypto market? There have been reports that Joe Biden is planning on issuing an executive order restricting the use of cryptocurrency. According to a statement released by Joe Biden's staff on October 1, the United States will bring together 30 countries to accelerate our cooperation in combating cybercrime, improving law enforcement collaboration, stemming the illicit use of cryptocurrency, and engaging on these issues diplomatically. The federal government needs the partnership of every American and every American company in these efforts. We must lock our digital doors, by encrypting our data and using multi-factor authentication, for example, and we must build technology securely by design, enabling consumers to understand the risks in the technologies they buy. I am committed to strengthening our cybersecurity by hardening our critical infrastructure against cyberattacks, disrupting ransomware networks, working to establish and promote clear rules of the road for all nations in cyberspace, and making clear we will hold accountable those that threaten our security. But what exactly is the illicit use of cryptocurrency? And what restrictions are the government going to impose to stop this so-called illicit use? But, before we go any further, if you're liking this video, please leave a like, subscribe, and hit the notification bell so you never miss another report on cryptocurrency. Now, let's get back to the video. On September 22, the Department of the Treasury declared, as part of the whole-of-government effort to counter ransomware, the U.S. Department of the Treasury announced today a set of actions focused on disrupting criminal networks and virtual currency exchanges responsible for laundering ransoms. The statement read further, some virtual currency exchanges are a critical element of this ecosystem, as virtual currency is the principal means of facilitating ransomware payments and associated money laundering activities, the Treasury stated, elaborating. While most virtual currency activity is licit, virtual currencies can be used for illicit activity through peer-to-peer exchangers, mixers, and exchanges. This includes the facilitation of sanctions evasion, ransomware schemes, and other cyber crimes. One of the crypto exchanges already sanctioned was Suex for facilitating so-called financial transactions for ransomware actors. The U.S. Treasury reported, this was the first crypto exchange targeted for laundering cyber ransoms. All property and interests in property of the exchange that are subject to U.S. jurisdiction are blocked, and U.S. persons are generally prohibited from engaging in transactions with them. Janet Yellen commented, ransomware and cyber attacks are victimizing businesses large and small across America and are a direct threat to our economy. We will continue to crack down on malicious actors. She added, as cyber criminals use increasingly sophisticated methods and technology, we are committed to using the full range of measures, to include sanctions and regulatory tools, to disrupt, deter, and prevent ransomware attacks. So, is that how the government intends to stop crypto? Referring to crypto payments as ransomware attacks, and laundering ransoms? Is this so-called illicit use the means the government intends to use to halt the DeFi movement? How can it be DeFi if it is regulated by the US government? At that point, wouldn't crypto just be another number in a bank account? Another Zelle? Or Cash App? How will the markets react when these restrictions are imposed? It seems as though Biden's working group on financial markets is setting the table for increased regulation. Expect a plethora of reports to come soon and crypto legislation to be drafted in the near future. What started as a movement towards decentralized finance is quickly becoming a regulated centralized digital finance system. And now, breaking today, the Commodity Futures Trading Commission has just fined Tether and Bitfinex a whopping $42.5 million, citing Tether only held sufficient fiat reserves to back the dollar-pegged asset for 27.6% of the time during the 26-month period under review between 2016 and 2018. The CFTC also claimed that Tether violated the law by holding part of the reserves in non-fiat financial instruments, as well as by commingling operational and reserve funds. Talk about a huge blow to the crypto community. But that's just the least of it. According to a report this summer by blockchain analytics firm Elliptic, U.S. regulators have already slapped a total of $2.5 billion worth of fines on cryptocurrency-related companies. The charges range from fraud, breaches of AML regulations, offering unregistered securities, and sanctions violations. The agencies responsible for most of these violations are as follows: the SEC, $1.69 billion, CFTC, $624 million, FinCEN, $183 million, and OFAC, $606,000. The majority of these penalties relate to unregistered securities offerings, $1.38 billion, fraud, $928 million, and AML violations, $183 million. The fines can be categorized as civil penalties, $722 million, disgorgements, $1.62 billion, and restitutions, $161 million. Isn't that mind-blowing? So, it's not that cryptocurrency hasn't been regulated already through existing laws. It's just that nobody talks about it. Take a look at this chart that shows the fines imposed by the government from 2014 through May of 2021. Talk about a huge spike. Why the huge spike all of a sudden? Is it because so-called crypto fraud has risen dramatically? Or is it because the SEC wants to end DeFi? We'll see how this all plays out. But one thing is for certain, crypto is already and certainly will be regulated in the future. It seems as though increased scrutiny and regulation are inevitable regardless of what crypto enthusiasts may think. Anyhow, on the date of this recording, October 15th, SHIB tumbled 9% from its most recent high on October 10th to $0.000025 with a market capitalization of $9.75 billion. Is a big dump in SHIB coming? Is it too late to get in on the action? Will you buy the next dip? Will SHIB ever make it to 1 cent? More to follow in upcoming videos. Anyway, that does it for today's market recap. We hope you enjoyed the video. Remember to like, subscribe, and hit the notification bell so you never miss another video. Also, let us know in the comments below, do you think SHIB will make it to 1 cent? What are your favorite crypto projects to watch out for? Do you believe crypto should be regulated? Thanks for watching and see you in the next one. Right here, exclusively on Crypto Talk.